Welcome back. Now, Kumba says its full-year earnings largely reflect the impact of lower iron ore prices, combined with a decrease in sales volumes, higher freight rates, and a stronger rand. With iron ore prices remaining the most significant driver of Kumba's adjusted earnings before interest, tax, depreciation, and amortisation, the miner reported a decline in both revenue and EBITDA. CEO Mpumi Zikalala joins us now with greater insight on that performance. Thank you so much for your time, Mpumi. It's been quite interesting to see the lower numbers that you have come to in this reporting period, but really also the reaction of the investors. I did see that your share price is up 8%, but I do know that CEOs will tell us that they don't really look at the share prices. So just characterize that performance in this reporting period.
Yeah, thanks, Inachi. CEOs do look at share prices, but we try and make sure that we are not driven by that to making short-term decisions. So if I look at our results, I mean, I've said it a couple of times today. I believe that we delivered a solid set of results. So a couple of things characterize that before I get to the numbers. Firstly, the safety and well-being of our employees is absolutely key. And we saw a 22% improvement in our total recordable injury frequency rate. And that for us is absolutely key because we spent last year doing some reconfiguration of the business, which required us to have a lot of changes. And what was fundamentally driving that was the fact that we had to have a look at where we were from a sales volume perspective, driven by the performance of Transnet, and readjust what we deliver to cater for the constraints that we've had in that space. So the safety side was absolutely key. If you look at the results themselves, you've characterized them. But again, I look at them, and it was a 41%, return on capital employed. Yeah. And that's still a solid set of results. You've spoken about the reduction from a revenue perspective and the reduction from an EBITDA perspective. That was largely, as you said, driven by prices. But the key for us in the space is that we very much realized, about 18 months ago, that we had to deal with the challenges that we have. We decided to fundamentally focus on ourselves as a business and focus on the things that we can control. And that for us was around the optimization of our mine plan to cater for the current reality, while still continuing to partner with Transnet and our government around the logistics space. And then secondly, we decided to focus on the reduction of our cost base. And that's been the highlight of today because we delivered a 4.4 billion rand saving on our costs. We had targeted to get to a number of around 2.5 to 3 billion rands. So really, there's been a lot of good work that's been done by our various teams. And I guess that's what people are looking at. It's the fact that we delivered on what we promised to deliver on within the space that we control.
Before I get into the details of what you did, what you can control, let's start off with the cycle that the iron ore market is in right now. Of course, decreased revenue because of lower prices. What have been the major drags there in that iron ore market?
So last year, we certainly saw a reduction in iron ore prices, primarily driven by weaknesses across the various regions. From a China perspective, we certainly saw a weakness from a property sector perspective, even with the stimulus that came from a government perspective. And then for the remainder of the regions, and we very much sell into the likes of Japan, South Korea, as well as Europe, we also saw some weaknesses. And that was the main reason for the reduction that we saw. I have to say that when we got to the latter part of the year, we sort of saw prices starting to stabilize at around the $100 per ton mark. And if I look at where we are right now, we're still sitting in the similar regions, so just above $105 per ton. And it's been good to see the stability in that space. The other thing that we watch very closely from a Kumba perspective, and that's fundamentally driven by the fact that we predominantly focus on the delivery of high-quality iron ore. So premium is very important for us, either driven by the Fe content or the iron content of the ore that we produce, or also specifically for us, the lump ore that we produce, which is fantastic, particularly for steel makers that focus on decarbonization. We saw the premium strengthening from around 4 DMTU to circa just around 14 DMTU towards the latter part of the year. And again, we've seen this sort of remaining stable around the regions of 15. And that for us is key. Because when we look at ourselves and look at our future capital investments, we predominantly focus on strengthening that space. I mean, I always say to people that when you look at Kumba relative to the global share of iron ore that's delivered, we actually are not that big. We are big in the country, but globally, we sit at less than 5%. So our key area of competitiveness is fundamentally looking at the delivery of high quality iron ore. And as we look forward, we will be investing in the ultra-high dense medium separation project, which will see us further strengthening that position. Back to iron ore prices, we expect that to remain flat this year, but certainly we still remain bullish from a longer term perspective. We look at the fundamental drivers, and we say that we know that the world's population will grow. We know that globally from a GDP perspective, that's likely to strengthen. And we also know that the world will have to decarbonize. And guess what? That requires steel, and more so, steel that's produced in a manner that tries to aim for the reduction in carbon emissions.
It's really been quite interesting to hear a number of CEOs in the commodity space talk about the short-term pressures that they have experienced in the different markets that they operate in, but really seeming that the outlook does look good and support the commodities that you are in. Also in the same stable, we did have the same kind of narrative from the CEO of Amplats in terms of the outlook on PGMs. You talk about what you could control. I do realize that there was also cost inflation that you were dealing with, but you managed to set in some relief there. How is the cost base looking like at this point, and really just how you're navigating, controlling what you can control versus some of the pressures that you are seeing on that cost front?
So Zinati, I mean, most bulks players will tell you that it's all about volume. But we realized that we were certainly compromised from a volume perspective and fundamentally decided that we were going to review our mine plan and optimize that for the current reality. So we essentially said, let's have a look at what we can do. So fundamentally, we then said that we know that as Kumba Iron Ore, we can very much deliver volumes that are certainly well above 40 million tons per annum. But we have to face the current reality and reduce that. And in line with that, we started with first things first, which is all about planning. For us, that's the optimization of the mine plan. And having done that, we then fundamentally focused on reducing our costs and also driving operational efficiencies. And that's what has led us to the delivery of the 4.4 billion rands, and that's net of inflation. If you include inflation, that number is around 5.6 billion rands. So we fundamentally said, what can we control? And we engaged our various teams across the board. And I have to say, I won't lie and say that it was easy, because it also meant that we had to part ways with some of our workforce and also close off some of the contractor base that we had. But we understood that we needed to focus on that in order to ensure the sustainability of our business throughout the cycle. We know that the cycles come and go. We know that the external challenges will always be there. And we fundamentally believe that we need to position ourselves to be in a space where we can influence what we can influence. And certainly when it comes to the local challenges that we have, we collaborate greatly with Transnet as well as our government. But the external factors remain there. But within our space, from a control perspective, we fundamentally focused on that and really delivered on that. And again, we've got another target for next year. We've set ourselves another target of reducing our cost base by 2.5 to 3 billion rands. And knowing my team, and I've got the best team, again, we'll focus on this. And the fundamental drive for operational excellence will be key.
Well, Mpumi, we do have to wrap up the conversation there, but also looking forward to seeing the fruits of that partnership with Transnet. Of course, we have seen more and more private sector involvement, and I'm sure we will be getting more on the progress there during the budget tomorrow. Thank you so much for your time. That was Mpumi Zikalala, CEO for Kumba Iron Ore.